Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, volatility is certainly a word that I'm sure you've heard on numerous occasions in the past 2 weeks, and certainly this is continuing to impact on these markets. Last week we saw volatility spike to record levels on the VIX volatility index that we've not seen for years, and that certainly just showed through these equity markets that plummeted on the front end of the week and then had a significant rebound on Friday, well Thursday and Friday. And moving into today, that's just slightly unwinding some of these gains in the European markets. The economic calendar is not enormously packed today, so it could just be a case of just settling down slightly, but there's a lot going on this week. They've got Chinese growth data, German PMIs, you've got US housing data as well, so a lot that can impact on these markets. So US earnings season is actually progressing fairly solidly. You've got a run rate of around about 7% earnings growth at the moment for the quarter, which is pretty decent going. This week you've got the tech stocks all reporting. You've got the likes of Apple, Microsoft, IBM, Amazon and Yahoo all reporting results. So we'll get a very good gauge of how these tech stocks are doing. And some of these are big hitting companies as well, big market cap companies, so they'll be significantly watched. Okay, so the forex markets are fairly settled to a certain extent because you've had this big dollar rally that is just sort of consolidating now. It had fairly fluctuating and volatile consolidation last week, but just settled slightly on Monday morning. Nothing too major going on in terms of movements, which makes it certainly a change over the past few days anyway. But I think that's just probably going to be the calm potentially before the storm through the back end of this week. With, as I said, you've got this Chinese and German data. That China and Germany have actually been some of the reasons why the market has been so volatile recently. So that could continue this week. In terms of euro dollar, it's broken up above $1.27. And I think that is a key near-term level. I think that holding above 127 in the near term just suggests that the bulls are slightly in control for a rebound, and there could be pressure on that 129 resistance. Now the support comes in on euro dollar at $1.26 at the moment. In terms of cable, it's been a slightly different ball game. I think cable has still been in this big 13-week downtrend, and continues to be sold off within that downtrend. It's not too far away from the downtrend resistance now, which comes in around about $1.6150, which coincidentally is where the 21-day moving average, again an indicator that has been used on several occasions as a selling opportunity, and a lot of these momentum indicators also rolling over. So cable, if it starts to fall away, it could well come back towards the test of that low again. 159.41. Now, in terms of dollar yen, I've been looking, anyone who's been watching my daily videos and reading my daily commentary knows that I've been looking out for a medium-term buy signal on dollar yen for a while now, and I think we could be close to getting one. Now, we've had the stochastics turn up and given a confirmation buy signal, but I think we now need to get a move above the 107.50 resistance, which was a key reaction high in the sell-off. And I think that if we do that, then I'm far more confident to say that dollar yen has bottomed out for the time being. But I certainly like the look of how it's progressing at the moment. In terms of the indices, well, certainly as I said earlier, we've had some significant volatility, and I believe we may well now have seen a near-term low. Purely, again, looking at that VIX volatility index, which has come off. The VIX, when it comes off after spiking up, can often be consistent with key market lows. So I think that's possibly one of the reasons why we've seen a near-term bottom. In terms of the S&P 500 and across all the markets, really, we're looking higher now. If we are holding onto some of these gains, we're going to start to look at the key resistance levels. Now that comes in at 1905 on the S&P 500, which is the old support, but also where the 200-day moving average is playing out as well. On the DAX, similar sort of story in terms of the resistance at 8903. On FTSE, we're looking out for 6400, and on the CAC 40, we're looking out for 4110. So just a few levels there for you to look at. In terms of the commodity prices, well, we've had a bit of certainly a dichotomy recently. The oil price has certainly been in the press a lot recently because of the big decline, but it may well now be showing signs of a bit of support coming in, which is interesting because it's coming around about the same time that the equity markets are finding support. So there's a little bit of a link there potentially. Looking out also for the gold price, the gold had been on a strong rally as the safe haven assets had been improving, but if the equity markets are going to start to recover again and hold on to the recovery, then the gold price might start to stutter a bit. And I think that 1240.60 on the gold price is a very key near to medium term resistance. And it's sort of been flirting around with that level in the last few days, still failing to close above it, and I think it needs to have that close above the resistance to sort of give the bulls a bit of confidence to continue to push higher. 1260 and 1280 in the next resistance levels above there. So throughout this week, as I said, you've got a load of significant data that can be driving these markets. Starting off with Tuesday, we've got this Chinese GDP. Now, China is a big growth driver of the risk assets around the world, and certainly when Chinese growth cuts back, then anything from commodity prices will suffer, and then the commodity currencies such as the Aussie and the Kiwi will also be impacted by that. That's on Tuesday morning, and certainly the market will be keeping a very close eye on that. Also on Tuesday, we've got the US existing home sales. Again, the housing market in the States is a big force for driving the economy, so markets will always be interested in that too. Now on Wednesday, we've got a couple of big factors that are going to impact cable. We've got the Bank of England meeting minutes. No real change expected on the makeup of the voting structure. 7-2 is the expectation there, and there's no expectation that that's going to be changing anytime soon, really. Especially in light of the fact that the UK economic data has just been a little bit mixed, certainly in terms of inflation falling away, wages not really growing, so that's unlikely to really change. And then into the afternoon, you've got the US CPI, which again, deflation or disinflation is disinflation is a big factor in the Western economies, and the US again is looking to come back on inflation, back from 1.7 down to 1.6. Any miss of that could have a reversal of the impact that we saw on cable last week, and we could shoot cable higher. Into the afternoon, into Thursday, the big numbers, we've got Chinese flash HSBC PMI, and we've also got French and German flash manufacturing PMIs as well. So big impact on the markets potentially on Thursday, because certainly the German data was one of the big reasons last week why we got a massive sell-off. So if that German data continues to deteriorate and suggest that Germany is stuttering, moving into recession, then the markets could well have another big dip down to the downside. And then on to Friday, as I said, we've got the more housing data for the US, but also we've got UK growth as well, GDP. First look at GDP for the UK. So again, another impact on cable. So a lot going on this week to impact on your trading and investments, and I wish you good luck in whatever you're doing, and I will speak to you next week. Thank you.